Hello, this is Brian Rezny, President of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, third quarter is almost over. We got a quarter left of this year. The volatility that I've talked about, that we really haven't seen very little volatility all year, has finally come to roost. We've got the markets down from their highs down 3 to 6%, depending which index you track. Not a big deal. We were expecting a 5 to 10% correction sometime this year, but that doesn't mean we are not going to higher ground before year end, which we potentially can. There are a few things that are concerning us in the economy. We still have, obviously, inflation is coming down quite a bit. Labor market is still quite strong, and the Fed signaled a few weeks ago that they're going to keep rates potentially at this level for longer and maybe raise or maybe lower. But I think what we're going to see is, as we get into the fourth quarter, we're going to see really an economy that is slowing down from the higher rates, which a lot of the leading indicators are showing us already. A lot of the indicators that the Fed looks at are really a lot of the lagging indicators. And so that is kind of a distortion on their, I believe, on their viewpoint on how they look at inflation. But if you look at the leading indicators and what's going on, we're seeing clearly a slowdown, a shift in the economy, bringing this inflation problem into reality, which is good. And if you look at all the different metrics around inflation, things ultimately look pretty positive. Oil prices are clearly moving back up. Glad we own oil in our portfolios. We continue to own oil, continue to add to oil, and we're going to as long as this current administration has a war on fossil fuels. Now, there could be a new administration in 2024. We'll wait to see what happens. But a lot of calls, of course, for recession last year, this year. We've had bouts of rolling recessions throughout the U.S. economy, but nothing that really has slowed down the economy. In fact, the growth of the U.S. economy, GDP this year, is going to be 2.5+%. That is not bad. We should be growing more, but again, policies do matter per administration. So we're overly cautious. We are usually overly cautious, to be brutally honest, but we are looking at greener pastures as we continue through the fourth quarter of this year. We're going to make portfolio adjustments as necessary. And again, when we make adjustments, we do it because it's what's best for the portfolio, best upon indicators, and best on what we see going on moving forward. If you're a client, of course, of the firm and you have any questions about your portfolio, if you're concerned or you want to sit down and have an in-office review or phone review, give the office a call. We want to sit down with you, go through your portfolio, make sure you understand everything, and make sure any questions you do have are fully addressed. In office, phone, they're both easy to do. I know that a lot of you watched the email video that we sent out last week. A lot of great compliments on that, by the way. So if you have not watched it, you should. And again, I stress to every single client, you need to check your email at least twice a day. You need to check your spam and junk folder at least twice a day and completely clear out that spam and junk folder. It's vitally important not only for security of your emails, but also to grab emails that should not have gone into that junk or spam folder and put those back into your inbox. Again, if you have any questions, give us a call. Make sure you have yourself a safe and profitable day.